Welcome back everybody to my channel. It's me. In this week's EUR-USD forecast, we will discuss the upcoming Fed's rate decision, new trade deals, and how it affects the euro and dollar. We also cover the latest news from the US-China negotiations and how it puts pressure on the Fed. But before we start, as usual, if you appreciate our work, all we ask for in return is like and subscribe. It helps us out tremendously and keeps us motivated to continue. Thank you very much for your support. Alright, so let's dive right in. The euro remains strong against the US dollar after last week's ECB meeting. The latest data shows that the Eurozone economy continues to grow at a solid pace and the unemployment rate remains low. This is good news for the euro, as it suggests that the ECB will continue to raise interest rates, which makes the euro more attractive to investors. The market is currently pricing in a 75% chance of a 50 basis point rate hike in March and a 25% chance of a 75 basis point hike. The dollar, on the other hand, is under pressure due to ongoing geopolitical tensions and the recent US jobs report, which showed that the economy added only 200,000 jobs in February, and the unemployment rate rose to 3.8%. This is below expectations, and it suggests that the Fed may not be able to raise interest rates as much as the market expects. In fact, the market is now only pricing in a 17 chance of a 50 basis point rate hike in March, with the majority of the rate hikes priced in for June and July. This week, the euro and dollar will likely remain range-bound as investors wait for the Fed's next move. However, the range is likely to shift higher as the market reprices the terminal rate. We are also getting closer to the March FOMC meeting, which could bring volatility to the markets. On the data front, we have several important releases this week, including the US CPI report, which could influence the Fed's decision on interest rates. If inflation comes in higher than expected, it could increase the likelihood of a 50 basis point rate hike in March. On the euro side, we have the ZB survey, which is an important indicator of economic sentiment in the eurozone. In terms of events, the main focus will be on the upcoming US-EU trade talks, which could have a significant impact on the euro and dollar. If the talks are successful, it could boost risk appetite and strengthen the euro. However, if the talks fail, it could lead to a trade war and increased demand for safe haven assets such as the US dollar. Last week, the US and Japan announced a new trade deal which includes a 50% reduction in car tariffs. This is a positive development for the global economy, and it could help to boost the euro, especially if it sparks a broader trade deal. However, so far, the euro has not reacted much to the news as it was already priced in. The same can be said about the ongoing US-China negotiations. The market has already priced in a positive outcome, and any news is unlikely to have a major impact on the euro or dollar. That being said, there is still pressure on the Fed to reach a deal with China, as it would help to reduce inflation by lowering the price of imports. Additionally, a deal would also boost risk appetite and strengthen the euro. Overall, the bias for the euro and dollar remains neutral to slightly bullish for the euro. However, if the Fed makes a hawkish statement and signals more rate hikes, it could strengthen the dollar. Support for the euro is seen at 1.0500, while resistance is at 1.0700. For the dollar, support is at 99.50, while resistance is at 101.50. As always, keep an eye on the US-EU trade talks, as well as the Fed statement on March. Have a great day and see you next week.